Making money when the stock market falls is undoubtedly an advantage. I'll show you some ways to make money. Short selling is very common. If you buy a stock that you think will go up in the long term, it's a long. If you think it will fall, it's a short. If a stock goes down from $10 to $9, you make $1, whereas if you were to long the stock, you'd lose $1. You make $1 by short selling. In contrast, you lose $1 if a stock goes up if you short it. There's no difference between the two, just vice versa. It's a high-risk strategy to short sell since the stock market and the businesses in America always tend to go up and up in the long run. S&P 500 has always gone up in the long run. Obviously, you don't want to bet against American stocks. Look for a short-term opportunity that might be a good time to short sell a stock that might be overvalued and try to make a profit when it falls to its fair price. Once it does, you can buy back the short position. There are behind costs of short selling. You have to pay fees and borrow money to short via margin, which is so risky most brokerages don't let you do it. Typically, they'll test you and give you certain levels to make sure you know how to use it. When you're a beginner, don't worry about short selling. Just buy long-term stocks. When you see a stock dip, buy it. Don't worry about it. If you're experienced, you can use short selling as an opportunity when you think a stock is going to drop for a short time. The truth is, I'm not a fan of short selling. I prefer options. Here's how I can buy puts. Options come with a lot of strategies, but I'm just gonna concentrate on one. When you buy puts, you don't have to borrow money from your broker, which includes fee and margin because options are leveraged. But they are risky because they all have time decay. If you hold a contract too long, the value of the premium will drop. That means I have to time the market, which is hard. You know we can't time the market. Suppose Apple is currently $190 and you buy it. Let's say it moves to $180 within a month. If it moves under $180, you make money. If not, you lose all of the premium you paid. Usually I look out for market structure, and that's when I decide to buy based on its median price. When I see a stock is overpriced and I get to short it, that's when I buy puts on it. I just exit my positions if odds go against me. It's much better than risking and losing everything. I know options are riskier than short selling. I'm going to show you my favorite way to short. It's selling calls. It's the opposite of buying calls. Let's say the Apple stock is $190 a share, and the other person thinks it'll go to $200. I'm selling calls, which is the same as short calls, to someone who thinks it will go up. Next week is the expiration date. Let's say it won't hit before then. I'll sell my call to someone else who thinks it's gonna go up. It doesn't go over $200 a week later. I get to keep all of the premium. Buy or sell options, and you've got to look at implied volatility, or IV. Learn how to take advantage of it. Buy options at low IVs. Sell options at high IVs. When the premium value crushes from high IV, I make money by selling. I can profit from low IVs because they're likely to rise in premium value. It's about playing around with IVs and having a strategy. I know most people use what I explained in this video. We never hold short positions long term again because money supply always goes up over time and is distributed all the time. Most businesses and stocks grow exponentially, so those methods are great for short-term opportunities, but they can be risky. Try your best as possible to time the market. Keep your portfolio diversified. Don't put all your eggs in one basket. Spread them out. There's no secret or special sauce. It's just reading market structure. You can see that the market is nearly all-time high, or it's getting higher and higher and higher. It's time for a correlation, pulling the price back to its fair value. If the market falls, you know what to do. Use those methods as your short-term edge. I hope this video helps you. Subscribe, like, and comment, so I know it helped you. You can also leave a comment if you want to know more or new tips. I look forward to reading your comments and making more videos in the future. See you next time, soon.